Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so markets today, another quietish start with the S&P futures, of course, slightly higher. That's basically what we've been seeing almost every day. We're kind of in this pocket now where later this week, we're waiting for inflation data as well as a 30-year bond auction. In addition, we know negotiations are going on between the US and China on a trade deal, but nothing has been released yet. So it's kind of a quiet period here. And remember, when it's quiet and there's been a bullish move in the markets, that quietness usually leads to neutral to upside bias in the markets. All right. So again, that's where we are today with the S&P up about 9 to 10 points here in the pre-market. Now, if we flip over to the daily chart, what we can see here, this is the S&P futures. This is yesterday's price action. So again, we kind of opened sideways to up. We floated up. Then we kind of had a little profit taking into the end of the day, but still ended slightly positive on the day. In the overnight, look at this. We had a nice little move up in the futures in the overnight. This was right before midnight Eastern time, between 10 and 12 p.m. Eastern time. And then we kind of faded and then had a big sell-off, came down again, and then this morning kicks in. This is very common. Around 4 in the morning Eastern time, the markets begin to grind higher. And again, you can see that almost every single day as, again, you start to see the positioning for the U.S. float from bigger investors. And then as it gets later in the morning session before the stock market opens, retail investors do the same thing. All right, let's flip over to the S&P and just take a look at where we are at this point. The S&P 500 yesterday was up about 0.1%, so very small move. You can see that it's starting to get smaller and smaller here, meaning that we're running out of energy to the upside. Don't forget, we are coming into the cycle date in about a week. So again, we're very, very close to that key cycle date. And as I've said in previous game plans, part of my thesis, or at least possibility, would be that we go up to our all-time high, we pierce it by a little bit, getting, again, the last bulls on board and kind of stopping out the weak-handed shorts, and then that cycle date potentially plays out with some down moves in the market. So again, we'll keep an eye on that. But right now, again, flattish day to slightly positive yesterday. We're starting the day out slightly positive today. Now, the NASDAQ is an interesting one here, guys. We are in a wedge pattern here. So take a look at this. If we take this high right here and we flip it up to these highs, look at what we intersect with. Exactly this high right here, which was this one little red reversal candle last week. And again, look at that. Exact high to exact high to exact high. Then what you do is you take kind of the lower end here, and you can bring this line up. And look at how it goes from the exact lows here, here, and all the way through here. And you get what we call a wedge pattern. Now, wedge patterns that are upsloping generally resolve themselves to the downside. But occasionally, in very bullish environments, what you can see is a short-term quick pop above and then the reversal down, essentially kind of faking everyone out, as we would call it, a bull trap in that scenario. Now, what's interesting about that is, does that then briefly also break our all-time high, just to, again, make everyone think, oh, the markets are just going to keep going and going and going before we see that reversal. But again, interesting little wedge pattern. I'm going to keep a very close eye on this, again, in the coming days. If we establish ourselves below this, that would be where the kind of the red alert or the warning sign for a market decline would be. As long as we stay in this, then you would give it a neutral to upside bias, kind of continuing the float. And then notice that wedge patterns, the reason you pay attention to wedge patterns is that price has to resolve itself at some point, right? Because you're going to come to a head right over here where price is going to either have to go above it or below it. And then that's going to be the path of least resistance, at least in the near term. So just something interesting to kind of keep an eye on in terms of a wedge pattern here. A couple other things to note here. There's a secondary trend line right down here as well. That, again, if we drag this up, you're right at that lower level as well, right? So this low to this low, and then you kind of come right through here as well. So there's a lot of trend lines here, which reiterate to me that if we break this area on the QQQ and we start trading down here, there's really nothing below here that would keep the markets up. So again, just watchfully, we're keeping a very close eye on this market to see. And again, neutral to upside right now, but if it breaks that wedge to the downside, then basically all bets are off. Bearish bias takes over immediately. All right. Dollar today, flat to negative, nothing much going on here. Again, yesterday we talked about the wedge pattern here. You have this trend line right here, which is parallel to this trend line, and you can see how the dollar is trading inside of this kind of pseudo wedge down here. After a big move down, that would be what we call bearish consolidation. We just don't know when it will break. I mean, in all fairness, this could go on for months where it stays inside of this parallel before eventually moving to the downside. The U.S. 10-year yield, take a look at this, guys. This is what I told you guys. I said yield's likely to pull back here. We broke down below this support line here. All right, we kind of consolidated just below it. We broke down there, rallied, classic retrace to the scene of the crime, and price gets rejected off that resistance yesterday and then today again. Couple warning signs. And again, I'm starting to see more and more warning signs out there in the markets right now. Warning signs, please understand, they don't tell you that the market is going to turn on a dime. It's basically, imagine if let's say you're standing on a frozen pond and you start to see a few cracks emerging. That's what we're seeing. It doesn't mean you're going to fall through the ice like this second. It's just kind of like saying, hey, be careful here. There are things that are beginning to show up that are problematic that could end in a major issue for the markets. And one of those things would be the semiconductors. The semiconductors, Nvidia, it continues to struggle at breaking this level. So yesterday, it was at its highest short-term move, got up to about 145, but by the end of the day, it closed back below this line. Now, this line is important because it's this pivot top here, which also was your earnings gap up high right here as well. So this line is something of interest, and it's just kind of curious to see how it's struggling as much as it is when a lot of the other semiconductor stocks have done very well. Another one would be the SMH, which is the semiconductor ETF. So this basically makes up all the semis or the whole sector. Now, the reason why this is interesting is that we are now tagging, or as of yesterday, we tagged this downsloping trend line. Right? So you have this high connected to this high, and right here, we tagged that same trend line. Now you see a trend line just above it. That's a gap fill. So we could go still up and tag the gap fill, but essentially you're now at a point on the semiconductors where you would say, okay, this now to me looks like a good shorting opportunity, right? Where it's starting to hit these major resistances after such a mammoth rally to the upside. Doing a quick measurement to yesterday's high, basically 53% move to the upside since the April 7th low. And again, it's not the up move that concerns me, right? I mean, things can rally 50%, 100%. We know that. It's more that it's rallied this much and is now slamming into two factors of resistance right up here. That's what gets my attention. All right. Couple other things to go over. I'm going to flip over to crypto now because crypto is in play. While the stock market tends to be a little quieter, crypto has had some bigger moves. Bitcoin, again, you had that one dip last week when the stock market fell on the Elon Trump feud. And then Bitcoin came right back as the stock market has ground higher. Bitcoin actually has rallied much better than the stock market here. Although, again, granted, Bitcoin made a top here. And while the stock market was going up, Bitcoin was kind of grinding back down. So again, it's just playing catch up to the stock market essentially. And while the stock market is essentially near its recent highs, Bitcoin's getting close to that. Now, resistance on Bitcoin's going to remain this upsloping trend line, which is just above 12,500, maybe 12,700. That'll be a level that I continue to watch as key resistance. Now, remember, resistance can be broken. So this is an important point, right? Is that resistance can be broken, but you also have to respect resistance until it's broken, right? And so, this was something that I made many mistakes on early in my career where I would just say, oh, it's going to break the resistance. So I would go long and then I'd watch it get rejected over and over again. Occasionally it would break out, but not enough times to make it worthwhile of taking the plunge and saying, oh, I'll go long now because sure, it'll break out. Generally, probabilities tell us that resistance is resistance until it hits multiple times. Then it weakens that resistance like a door that you're pounding on, and it finally breaks through. All right, so just an interesting little tidbit there. In terms of support, this level will remain support down here on Bitcoin. Ethereum. Now, Ethereum's an interesting one, guys. This, by the way, has had a beautiful bull consolidation pattern. If we drag a trend line here, we can clearly see here's your bullish flag pattern, and this is now breaking out. So Ethereum is breaking out. It has broken out based on this chart at this point in time. The question is, where is it likely going to go? To do that, I look back at history and I say, okay, notice how we rallied here, pulled back, consolidated, went up, pulled back, bounced up, pulled back, bounced up, pulled back, and then finally broke through. That tells me there's a ton of, there's basically a zone here of support. It was support here, but now it's going to be resistance, right? And if we put a trend line in there, notice again, hit, bounced, kissed, bounced, pierced, bounced, kind of hit, slight pierce, bounced, and finally broke through. This tells me that if we go up to this level here between 3,050 and 3,100, there should be significant resistance. So I think, again, probability-wise would have me thinking Ethereum has further upside, but once it gets to 3,050 to 3,100, that'll be where the chart tells me there will be significant resistance right there. Okay, so just something to keep an eye on that front. If we did continue to break up, I would just say, okay, we'll just take this trend line here. This would be another big resistance, down sloping pivot highs. Again, that's a long way away, probably not worth talking about at this point. But in the very least, the 3,050 to 3,100 level is in play. Taking a look at gold real quick. Gold is bouncing up again. Notice again, it broke out here of this kind of down sloping trend line. Notice 1, 2, 3, and the fourth hit, it broke out right there. Okay. And then consolidated, came back, retraced to the scene of the crime. You'll hear me in these game plans say retrace to the scene of the crime many, many times, because it's something that honestly, it's a great setup. That's the time to buy it. It's not to chase it when it breaks out and confirms, but wait for the retrace to the scene of the crime. I found that about 7 out of 10 times charts retrace to those scene of the crimes. In any case, gold is inching up a little bit today, but nothing to write home about. The bias remains probability-wise bullish as long as we hold here. If it gets in here, you go into more of a neutral stance. And then if it breaks below this line, this would be bearish until the 29.50 level down here. All right, but right now, bias is bullish on on gold. Speaking of silver, silver has had a rock and roll move here. Now, yesterday, when we were near these highs, I did take profits with my Smart Money commodity members on the SLV ETF, which is the silver tracking ETF. Now, you might say, well, why if it's going to go up here? Well, I have to do a risk-reward assessment, right? So I bought right over here on the breakout. We had this beautiful consolidation. We made about 13% on this trade. It was a great little trade to the upside. But then I have to say to myself, okay, well, it's already getting extended, and I have major resistance coming up going all the way back to 2012 right here. And so as a technician, as someone who's managing risk in my portfolio, I have to start saying, okay, well, if I exit here, my upside, I'm potentially missing out on 2% upside. Okay, 2% upside. I mean, that would be nice to have in my portfolio, no doubt about it. But at the same time, what's my downside? I mean, what if it just pulls back to this pivot and this former pivot high right here? I'm risking 5.5%, 6% by going back into this range or even here, right? So right down into this sideways consolidation right there and this former high. And so at a certain point, you say, okay, listen, I could hold on to it, but at the same time, how much can I get? Essentially, how much more juice can I squeeze out of this orange versus should I just grab it and say thank you very much to the stock and commodity gods? And that's what I did yesterday, folks. I just said thank you very much. I'll take that. Great gain. Now I move on to the next trade. Speaking of the next trade, oil is bumping up. Look at this, guys. Look at this. How long have I been saying if it retraces to this level, which it likely will, because that would be a scene of the crime retrace, this now becomes an opportunity potentially to be a short. Now, I haven't shorted it yet. I'm trying to let it at least pierce 66 and get above 66. But again, it is now officially hit the low end of this little support zone. And again, this is where it starts kind of flashing orange or yellow, not red necessarily yet, but orange or yellow, that it's now alerting that there might be a shortable trade right in here on oil. Lastly, natural gas, as we jump over to nat gas. Nat gas has kind of been left for dead for the time being. And again, natural gas is very much like this, where it has these big moves and then it kind of goes into a quiet period and then it'll have another big move. But the point being here is I have my resistance, I have my support, nothing to do here if price is just stuck in between. There's no bull flag, there's no bear flag, there's no high probability setup that would get me interested in that set in a trade on this essentially. Now, again, the one thing I will say is, could this be a cup and handle pattern? Maybe, but then I also worry, and this is where you're getting cross currents and why I won't take a trade. This could also be a down move with an inside kind of bear flag, right? So you have the cup here and then maybe a handle, or is it a down move and bear flag? And this is so important because generally, and this is again super, super important to stress, is that most of the time investors, and this is me when I was a younger trader, I mean, 10, 15, 20 years ago, I would be like, well, I really like natural gas, so I'm going to go with the cup and handle pattern, which is a bullish pattern. And then lo and behold, I'd take a shot at it and it would be a 50-50 chance, right? Because my mind was making itself up versus looking at the chart and saying, okay, well, the chart is showing me one bullish pattern potentially, but then it's also showing me one bearish pattern. Now, if you have one and one, what do? They cancel each other out. And so the real trade here is to do nothing, for me at least, right? It's to say, I don't have that 80% success rate probability because there's cross currents on my signals. So therefore, stay away. All right. Most of us in our early trading careers are going to be like, oh, well, I really don't like nat gas, so I'll short it off of the bear flag, or I do. And that's problematic. That's how we get into trouble. So again, guys, these are tidbits, knowledge that I've learned the hard way, but I always try to say, hey, listen, if I can help you guys avoid a few pitfalls in your trading journey, then that's what my goal is. And that's what verified investing is all about as well, is that essentially leaving it up to the charts, AKA probabilities, to make the decisions. We shut off our personal brains and our personal biases as best we can, and we just listen to the charts. All right, guys, as always, a pleasure to be here with you on this Tuesday morning. Thank you so much for tuning in. I got to get to my trading room. You guys have a great one. Take care.